Hello, everyone. Welcome to the December 16th edition of This Week in Crypto with Santiment. Thanks so much for joining us. And we've got, as always, a lot to talk about, but probably a little more than usual this week. We have had a topsy-turvy week, to say the least. It was looking quite strong, and then Wednesday rolled around, and the FOMC decided that it was time to mix things up. And it's interesting because the FOMC's decision was pretty much what was expected and what people were talking about happening, which was another interest rate rise, but not quite at the same frequency that we had been seeing throughout the year 2022. And with a lower interest rate rise going up basically 50 BPS instead of the usual 75 BPS, which had become the norm, traders were actually getting quite excited after hearing the rumors of this being the case about a week and a half ago, and prices began to pump. We started, seeing 5-week highs. We had Bitcoin nearly scrape 18K at one point. Ethereum got above 1,300. I think actually close to 1,350. And that was great news. Things were starting to look solid. Traders were starting to feel more comfortable dipping their toes in the water and making more risky plays on, smaller altcoins. And then, as the FOMC announcement or meeting approached, prices again went through one final surge. The announcement was made, and my theory, everyone has their own, but my theory that a lot of news outlets have themselves is that Powell's words, along with the 50 BPS rise, is what kind of gave a little more of a bittersweet sentiment than we were expecting. He was very adamant. I watched a lot of this. He was very adamant about how the big focus is still on combating inflation and avoiding a recession at all costs. And that means continuing to increase interest rates as time goes on. He was fairly certain that this would not be the last interest rate rise by any means, which is not a surprise. But obviously, many of you watching this, especially if this is one of your first calls that you've watched, you're wondering, why does this apply to crypto so much? And that's a fair question. And just to make sure that you're up to speed, there's been a massive correlation for pretty much a year now between the S&P 500 and what's going on in the crypto world. I'll show you right here. Didn't want to click on wrapped Bitcoin. Let's try regular Bitcoin. And now we're going to go to my template here, SPX. So what this chart is doing is measuring the price percentage fluctuations between Bitcoin in bright green, Ethereum in dark green, the S&P 500 in teal, and gold, the price of gold, that is. So this is the past 6 months. We'll even back it up to the last year. And what do we see here? We see Bitcoin and Ethereum still looking pretty good at the end of the year, then really dropping off fast. You can see how the S&P 500 is right there with it. They go up, they go down, up one more time, and look how close and tight they are throughout that March through June time frame in particular. Before we start to see some separation, the S&P 500 goes on a run here up to mid-August before a correction happens. We have the Ethereum merge happen right here in mid-September. Fairly flat markets ever since. We have a final downswing here in early November, and this is the big separation, right? We had the S&P 500 actually go through a nice little resurgence here, while the S&P 500 gets the news about FTX and Sam Bankman-Fried. And ever since then, things have been a little more widespread, which is actually a good thing. Crypto bull runs typically happen when there is zero reliance or minimal reliance on equities markets at any given time. So the question is, do we have zero reliance? Well, it kind of looks so when you take a look at the 1 year chart here. But if you zoom in, let's go to the last month, it's actually still a lot more correlative than it may appear. So there was that big separation. Here, I'm looking at 1 month. We'll look at 3 so we can see when that separation happened. Right here, this was all of the rumored news about FTX and, it being insolvent, and then boom, we find out it is indeed insolvent and the company's going bankrupt. Boom, Bitcoin and Ethereum fall massively. The S&P and gold do not. But again, zooming in right past that big separation, they're still showing quite a bit of correlation here. We've got S&P 500 going up one day, down the next day, up the next day, down the next day. And crypto's essentially done the exact same thing. And as of just, I think, the last hour or two, we've seen another big downswing, at least here in the US. The S&P 500 markets opened about 30 minutes ago. They opened it down, which it was looking like based on futures markets. And Bitcoin is down quite a bit as well. At the current time, going back to our data screener. By the way, Maxim, if you're there, say hi. I would assume you're not here yet, but when you do jump in.
No, I'm here. Hi.
Oh, there he is, Mr. Maxim. How are you, man?
Good. Thank you. Sneaked in.
You snuck right in, you did. But as I was saying, if I switch to the largest market cap on the left, so this is essentially the top 100 market cap assets in crypto. Yeah, so Bitcoin is down at just around 17K. Ethereum, I saw like 5 minutes before this call started, it actually went below 1,200 for the first time in a couple weeks. And yeah, it's essentially a sea of red right now, with the exception of Toncoin, which we actually had an article about earlier this week. OKB is up a little, Bitcoin SV, and then these are essentially just neutral. But we're talking about 90% of the top 100 market cap assets being in red, and that's obviously a concern. You can look here at all the green on social volume as well. You can see that the discussion rate is actually up, and this is a good thing. Whether prices are going up or down, when you're seeing social volume going up, it generally means the crowd is becoming more interested in crypto, and this is the ideal reason that they're more interested in crypto, because they're talking about how poor of an investment crypto is because of how long this bear market has gone on, the latest dip after people were finally starting to get optimistic. And it's essentially a big FUD fest going on right now based on our data. And when we see the crowd start to become unanimously, or getting to the point of unanimously, discussing crypto being a scam, projects being dead, or SH you-know-what coins, that essentially is the sign that many patient bulls are waiting for, that capitulation's happening and prices can essentially turn around once enough of these quote unquote weak hands drop out of the markets. So the question is, are we at the ultimate pain point where traders are no longer interested in crypto being a viable investment? Hard to say. As always, it's hard to say. I know it's a kind of beating a dead horse to talk about it. But yeah, I think this is the most pain that I have seen. Maybe in the past 6 months, possibly 12 months. And I'm curious on your thoughts here as well, Maxim. What have you been seeing as far as sentiment goes? We've been talking about it a lot in our market intelligence channels.
Well, it depends what time frame you is asking.
Well,
yesterday
just the past week, for example.
Yeah, we had for a short time expectations of 22K in Bitcoin. Now it's gone for obvious reasons since a drop yesterday and to continue drop today. There are some signs that people say we might see 10K, not much yet, to make a strong contrarian call. I would say that we are still a kind of reluctant, not we in terms of us analyzing, we in terms of bigger crypto community having a consensus what will happen next. But in terms of expectations, yeah, this is a boundary 10 to 20K at the moment, I would say. And now when you look into it 10 to 20K, for some logical reasons, it looks like it's easier to go short, or at least for some players. Not for me.
Yeah. No, I mean, we haven't even talked about it yet, but there's a ton of Binance FUD out there too. A lot of people are questioning the solvency of the largest exchange in crypto by a large margin. And that's not good, right? Because we have a lot of people thinking, thanks to what happened with FTX last month, that other very large exchanges might be having secrets up their sleeves and are about to pull the rug out from underneath people's feet. And that's a natural sort of behavior that the crowd will have after getting burned so severely by an exchange that, by all means, right before November happened, was considered one of the most trusted in the world. And now Binance is going through its own issues. BNB has taken quite a hit after, apparently 20 million more coins have been minted out of thin air. People are questioning that and why that can happen. CZ has said some very polarizing things in the Twitterverse that I won't really get into, but it certainly has rubbed people the wrong way. He spent a lot of the last month actually attacking other exchanges and having kind of a back and forth with Coinbase's CEO. So there's a lot going on. And obviously FTX's bankruptcy trial is underway right now for those tuning in for that and popping their popcorn. It seems very messy what we're learning about that, and it's giving people a lot of questions about just how crazy these rabbit holes can go with what's going on behind exchanges that had been trusted for a very long time. So it's kind of like we're getting the curtain pulled back and we're having a look at just what kind of operations can go on behind an exchange. And we're now applying our observations from it to what can be possible for the other exchanges that have not gone through this bankruptcy process and are still operating as usual, but everyone's scratching their head going, can Binance be having these same types of operations? Can a lot of these other large exchanges be doing the same thing?
I think, Brian, we should be clear on that. FTX is a special case on a scale and on kind of unlimited greed they executed. Binance not doing anything like that. I don't believe them have any liquidity issues.
Yeah.
But they have legal issues. That's
right.
Quite obvious. The way they're operating, if someone wants to bring them down, they can try to do it. If it works not, it's another question. So in these legal issues, imagine they're operating in like many different areas. I don't know if they operate in Bahamas.
Mm-hmm.
And one of them is just suddenly got frozen, because of legal suspects. And 5 billion not disappeared, like in case of FTX, lost on the market. No, Binance has all the money, but they're frozen. So, and the news got leaks out, leaks out. It's called leaks out, but most likely pushed out by competitors or whatever. That's it.
Yeah.
In the current market conditions, 3 days and Binance is there. And this is why we see the token and the general market is a kind of heavy, if even any reasonable participant, especially with big amount, of course, they don't assume Binance to be even close to insolvent. No, they're very profitable. They don't play this game, take money from customers and put in directional long or short positions. They don't need to do it, and they don't do it. And they organized from very beginning, very smart. That there are market makers, independent, and they're doing their business for this initial exchange offering, which is very profitable business too. So it's only legal. Now, will the market push them to the ground now, or will try to push them to the ground now, or sometime later? No one knows. My bet, nothing will happen now. I bet we will rather recover in a rally for 6 months, and then we will have another story of legal. Let's say we will see another probably real final bottom, coinciding with legal problems for most of exchanges. Well, except maybe Coinbase, maybe even Coinbase. I don't know. When it's really go to the bottom, everyone is the same. Just because the legal system not working so fast. If even now FTX is under research and there will be hearing and there will be lawyers, it will take 2 to 3 months to clean up the mess or to understand what's going on. So at the same time, market can rally if even terrible news coming out. But then magically it will tone down and we will make a real final bottom together with, I don't know, be it Binance or Aave or Kix or Coin, you name them. God knows which one will get liquidated in the wake of legal problems.
Yeah.
And that will be the final bottom.
Right. I want to be clear. I think, if anything, this FTX issue has just opened up traders' eyes to the fact that anything is possible, right? That anything from the most trusted places, from the most trusted projects, anything can happen. And the whole point is, I agree with you, Max. I think that it is absolutely just a legal issue that has been, arguably blown way out of proportion. And so the irrationality is starting to really become prevalent, where people hear one story and then say, CZ is part of the mafia, or there is something with Binance's solvency, even though we've seen zero proof or even smoke that would point in that direction. So the irrationality is it's the same stuff that we saw in 2019, right before the bull rally kicked off, which arguably is a good thing. And it supports your argument that we could be on a 6-month rally right around the corner. But
yes, as a matter of fact, what you say, and maybe it's good for us to visit a bit of data. I was just before the call, that's why I came like a few minutes later, comparing December of 2018. Actually, it was exactly 15th of December, so exactly 4 years ago, we built the final bottom of what was at that time bear. And Yeah, it's quite interesting. I think we will look into it. It's, maybe not so many people have been through the cycles. I made it from 16, beginning 16 to all the top and down to 18. I still remember Ethereum going down to $80. That was very painful. Our treasury at that time, yeah, we did have enough to survive for some time, but it was very heavy feeling. I have a kind of similar to it now, not as heavy, but yeah, similar feeling. And then recovering from $80 to 320, I think it was in the first wave. It took 2 months.
Yep.
No, in 18 going into the February of 19. It took 2 months. The first wave, when you look on the chart, you don't even notice, but it was a big event, 2 months. Yeah, and then some recovery. So it was, yeah, around 6 months, the first big wave up. In the case of 18, 19 and going to the 21, it was a long bull market. I'm not sure if we'll get it now. For the moment, I'm more like we'll have 6 months very good growth and then attempt to make a final bottom. Still, we can compare. Yeah. We don't have so much data, or we didn't have so much data back in 2018. No MakerDAO, no Compound Aave, which I like to check now. But we have network activities. Yeah, we have trading volumes. We have social sentiment. There is something, and the story seems to be repeating. Yeah, there are some things. There are some things. Yeah. So whenever you think we can visit it, we can do it.
Absolutely. Yeah, I mean, why don't we look at some of the data here and see how it supports what we, both you and I, Maxim, have seen anecdotally here. And we can begin with really the story that formed the top, and that was the news of the FOMC, which I already mentioned. Powell raised the interest rates by 50 BPS. We see exactly when the top was. We saw the price correct here right around 17.8K for Bitcoin, the largest FOMC spike in 3 months. I don't know, was it 6 months? Yeah, so it was one of the largest of the year. And this is exactly where the price top formed. We've seen in previous instances that FOMC spikes are essentially price reversal indicators. If prices are moving down, boom, we have a rise. Again, moving down, we have a rise. Same thing here. This was a rise marker. Even right here, this was a rise marker, which was interesting, but then it got overtaken by the FTX news here in early November. And then finally, we have this one, which happened on a price rise and prices went down. So the question is, where do we go from here? And maybe we can start by looking at the buy versus sell calls going on. Typically when we see larger red spikes here, which indicate high amounts of fear, that can lead to rises. When we see large amounts of, let's see, I guess this is probably the best example, large amounts of buy calls, that typically leads to tops forming. And so just so we don't have to look at such a short-term time frame, this should illustrate my point a little better. Yeah, so like right here, for example, bunches of red, price goes up, and then we start to see a ton of buy calls, price falls off a cliff, tons of red, price is going up. Not a lot either way here. And then this one was a huge polarizing spike. This one was a lot of buy calls, and prices actually were still able to go down. But given enough time, and if I had an hour to go through this chart, I would be able to point to mostly big buy signals being the top and sell signals being the bottom. And right now, it's a little bit of both, probably favoring the sell calls, which is why I'm optimistic, at least on the midterm time scale, that this pain won't have too long of a duration. So we'll have to see, Max, but I'm seeing a lot of negative sentiment kind of overtaking the positive sentiment. And it's really not close. I think it's pretty obvious based on just the amount of Twitter posts and Reddit posts out there that they're really focused on all sorts of scams and reasons that crypto should be dropping further right now. And to me, that is a sign that we're at least in the early-ish stages of capitulation.
Yeah.
We can look here at the frequency of buy the dip, and look at how it's really fallen here over the past 3 months or even 1 month. Everyone was saying buy the dip as the FTX news was breaking. They thought it wouldn't be that big of a deal. It ended up becoming a big deal, and then people started to get really quiet. One final push here, and you can see how silent people became with buying the dip by 10 days after the big fallout of FTX. And then once they got silent right around here, oh, what do you know? The bottom hits and we start to rise again. And obviously there is no dip buy opportunity here unless you're talking about long-term timeframes. But on the short-term time frame, not a lot of people saying buy the dip, obviously, because prices are rising. And even this time around, look at how over the past 24 to 48 hours, there is a fairly decent dip forming, but nobody really calling for for it being a buy the dip moment right now. And I find that really interesting, because if a dip happens and people are not saying buy the dip, there's a much larger or potential for prices to actually rise. Whereas if the crowd unanimously says buy the dip, the dip is likely to continue because the crowd is not panicked or fearful enough of prices falling further. Now, moving on to a chart we were discussing earlier this week internally, take a look at these sharks for stablecoins right now. We see that USDC, the address is holding between 10,000 to 100,000 coins. They have just continued to rise and rise and rise since May here. And oh, this is interesting. It's only showing through July. We want to see, let's look at the last year. That's better. So yeah, basically they bottomed out in February and have been rising and rising, more than doubling the amount of USDC that they've been holding. And in Tether, the bottom happened a few months later, not until late June, but now they're really rising. And look at this very recent spike that started about 5 days ago, showing that there's been a big accumulation by these sharks. And it's not just the sharks either. Let me show you what we found on, actually, I've got a chart right. There we go. So these are the actual whales. And the whales are absolutely starting to accumulate pretty big in terms of stablecoin holdings. The red here is the percentage of Tether being held by $100,000 to $10 million addresses right now. We had already been seeing a rise from whales since the very beginning of August, but this was the biggest surge in terms of just a short-term time frame that we had seen in about 10 months. And they weren't the only one either. If I highlight BUSD, you can see that same spike right around the same day. USDC was the one that actually fell down, and then DAI actually continued rising. So 3 out of the 4 stablecoins saw a big surge about 5 days ago, and they've stayed high ever since. USDT, for example, these whales are holding 31.5% of assets, and that is the most now that they've held since it was free falling here in May. So we're at about a 7-month high. And the question is, what does this mean? Well, it means that the buying power of large holders, institutional investors, people that have enough capital to really move the markets, it's been rising pretty dramatically. And your first instinct would be, well, if they're rising their stablecoin holdings, they're probably selling off their Bitcoin holdings. Well, if we look really short term right here where my mouse is, since the 10th, Bitcoin has actually been moving up.
Yeah.
So the whales,
they're selling shitcoins.
yeah, that's the really one of the primary.
Finally should do it. Yeah.
Exactly. It's a primary sign that capitulation's happening when shit coins are being sold, moving into Bitcoin, and stable coins are rising rapidly as well. That's exactly what we saw in 2019, and I think even 2016 when you were talking about when you were first getting into trading. So
this is a real flight to quality. Actually, I think no, we don't have it in some base. But if you have a Bitcoin dominance, it's keep growing, and with every Oh, do we have it on some base? I don't remember. Did we?
Well, are you talking about price dominance, not social, right?
No, yeah, it's by market cap Bitcoin dominance, which I usually check still out of habit on trading view, but I think we want to trade it anyway. It just believe me, every crash just keep climbing up. This is what you want to see.
Right.
It's a tightening and increase in fear, and understanding quality is a key. And this is where usually market can grow from. Market cannot grow from over extended shitcoins market caps. No, everything has to be below 10 millions. Then it can grow. Yeah. I mean, for altcoins below 10 millions. Then we can grow. Yeah.
Well, when looking at
there is a good saying that the best cure for market depression and bear market, it's a low valuations. This is the best cure.
Right.
Where they almost there.
Mm-hmm. And on a related note to the price dominance, I mean, we can look at how many conversations are related to Bitcoin versus altcoins right now. By looking at social dominance, which measures Bitcoin's percentage of discussions versus the top 100 market cap assets in crypto. Basically, throughout the year, we found that 20% is the key line that we want to see. So I adjusted this line, put 20% as the zero marker. Anything below it means there's not quite enough discussions to justify that Bitcoin is being talked about at a healthy enough rate. Anything above it means there's a healthy rate of discussion related to Bitcoin, and prices typically rise when more focus is on Bitcoin versus shitcoins. So that said, we've really only seen one stretch throughout the year where there was a very clear healthy amount of discussions, and that was from mid-June to latest July before it fell. And what do you know? This was really the only sustained rise that we saw outside of this more anomalous one that happened from March, basically just a two-week stretch from mid to late March. But now here we are, Bitcoin social dominance. Look at that, right before the huge crash. This might have been more coincidental than anything because this is when the FTX news broke. But regardless, it got to its second lowest point outside of March right here. And since then, it's actually started to rise back up. Now we're still well below the health point that I explained, but we're getting there. We're at least moving closer to a healthy amount of discussion about Bitcoin. And if we get to this point, history says that prices tend to start moving in the direction that bulls want it to, right around there. So keep that in mind, and let's see what else we got here. Funding rates while we're here, mostly flat at the moment. We can zoom into like just the past week. And yeah, we're really not seeing a lot of movement in either direction. If something was up here, we'd see a lot of greed. If something was down here, it would mean there's a lot of fear. And at least on Deribit, it does look like there's some decent shorting going on. We saw right here when there was shorting that actually led to at least a very mild bottom, but not enough significance to really say funding rate is impacting markets in any way. Just really quick on Ethereum, we can see that we talked about this last week. There has been a pretty decent accumulation ever since the FTX news broke by key sharks and whales holding anywhere between 100 to a million Ethereum. So since November 7th, holding down shift here, there has been a rise of these addresses holding about 1.5% more of the entire supply of Ethereum than they were holding about 5 to 6 weeks ago. This was a rise of about 2.23% of their bags based on what they were holding from this point. So that's a pretty significant accumulation. They're holding just under 2/3 of the overall supply now, but you can see that there's still a long way to go to catch where they were a year ago. But typically when we see rises in accumulation of these key Ethereum addresses, the price of Ethereum versus Bitcoin does tend to go up, whereas when they dump, prices of Ethereum versus Bitcoin tend to go down. So keep that in mind there. And let's take a look at a few other key ones. I was given a few of these charts by our colleague Gary yesterday to take a look at, and I found this one really interesting for synthetics. Take a look at just how closely tied the 10,000 to 100,000 SNX coin wallets are to the price of SNX. We see when they accumulate, price goes up. When they dump, which they have been throughout the pretty much the majority of the last 2 years, prices tend to go down, and they've gone down pretty significantly here. I think this is one of the better correlative whale to price charts that I've seen, and it's worth keeping a close eye on if you're still looking at some of the altcoins out there that are very volatile and could potentially go on quite a run if and when Bitcoin finally becomes stable again and moving in the right direction. Another one, and I may want your help on context for this one, Maxim. This is the wrapped ETH and Aave deposits and liquidations. And at least from a chart perspective, I can say that when we see these spikes, it generally is a good sign that leads to bottoms. But maybe you can better explain exactly what these red and yellows are representing.
Depends. It can be both. First, if we see a spike on the falling market, yeah, which you saw, it's like 20th of November. So it's shortly before the bottom. Yeah, someone gets scared and they deposited more collateral to their positions, but normally market will go at least a bit lower, trying to liquidate and put the pain. So some people who put collateral will not be liquidated, others will be liquidated. Which you see not as this case in November, you see no liquidation still. They felt tensed and deposited more. But if you see deposit on the way up, and actually you also need to add USDC, it means that now people see opportunities to deposit more to exploit it. Maybe some short-term buying some altcoins, I don't know, maybe some short-term arbitrage. But there is a perception risk are less. So I can deposit Ethereum without much risk to get liquidated on the way down. And there are some opportunities. So mostly they're both confirmation of a growing market, but they're also confirmation of very rapidly approaching correction, because there is enough consensus or strong enough feeling there are opportunities in the market. Yeah. And it's especially true now in the phase we are now, when there was a painful bottom and we are just trying to reverse from it. So when we see, let's take the present moment, if we see these spikes of Ethereum or wrapped app deposits while we are trending down, yeah, it means the bottom will come probably like 1 to 2 days. This is the one signal. Yeah, 1 to 3 days maximum. Depends if it's coming like on Friday, I would wait till Monday. Yeah, the liquidation sometimes, I remember from past, there was a time when most crazy liquidations happens on weekend. Maybe at that time, I don't know, some big players did not maintain the risk properly on the weekend. I don't know. So there was a time big liquidations happens on the weekend. So if on the way down we see it, give it 1 to 3 days, the bottom is in. If on the way up, it can happen when faster the top, but then it means the top is rapidly approaching. Yeah, but it's similar like we used 3 years ago. Bitcoin was, I think, out of 8 times, 6 times big age consumed spikes means reversal volatility marker. Now this is the one. Very few people use it, so it's quite valid signal. Yeah, it's volatility reversal.
Gotcha. Yeah, just like many of our metrics, you pay attention to what direction price is moving. Yeah, and if there's a big spike, prices do 180 based on what direction prices are moving. And it looks like this is a really good one, really good one.
And now even we have some history for the last month. You can even with your eye see approximately the level. So it should go to the level which are this last 4 spikes. Somewhere, if you see somewhere there, okay. We are either at the bottom if we're going now down or very close to it. You can wait for it. Maybe it's a good strategy. At least you remove a lot of risk.
Absolutely. Yeah, thanks for giving a nice explanation. This is definitely enlightening for sure. Let's see what else. So we put out an insight a couple days ago about what whales are doing, and found some interesting analysis on Bitcoin regarding, the overall supply held by the key whales, which we've talked about frequently on this stream. 100 to 10,000 Bitcoin addresses tend to push markets up and down more than any other tier. And whether you're in an altcoin or not, you should be paying attention to what the 100 to 10,000 BTC addresses are doing, because they generally lead the way in terms of overall crypto market prices all over the place. And now this is the number of addresses, and I'll look at the percentage of supply in just a moment. But you can see that the number of addresses overall, there's about 43.46 million trackable addresses in Bitcoin. And then 15,848 of those are those key 100 to 10K addresses. And that comes to a ratio of 0.0364%. And that ratio recently just got a lot higher, as we can see pretty clearly right here. Right around the 3rd week of November, just about a month ago, we saw a big surge right around the end of the FTX spike of discussion. And then all of a sudden it came back down as if this big blip never happened. Meanwhile, the whale addresses went down and then have gone on a big surge and have pretty much hit a 3-month high now in terms of the amount. So that theoretically should be a very good sign. Now going down here, we showed this chart just about 15 minutes ago, but the green line right here is the percentage of supply held. And just over the past 5 days or so, I want to find the percentage rise here if I can. We'll just go to the actual chart. I'm not sure where I wrote it. So right here, if I just hold down shift since November 21st, we're talking about 4 weeks ago. The overall percentage of supply accumulated is about 0.24%. These Bitcoin whales have added 0.55% to their bags. So they hold about half a percentage more than they did a month or 4 weeks ago, I should say. And then if we want to look at it by absolute values, we can simply merge after highlighting absolute, click on 100 to 1,000 and 1,000 to 10,000. Full screen that again, and looking at the pink line, which is now showing the absolute values, just in the last 11 days, they have accumulated 45,177 Bitcoin, which is hundreds of millions of dollars. And that's significant. And, looking at the pink line, it hasn't been great at all over the past year. And this explains a lot of why Bitcoin's price and crypto markets prices have been dropping so much. But at least for the last 4 weeks or so, we're finally seeing some pretty sustained good signs of Bitcoin whales no longer dumping their assets. And to me, that's one of the better signs we've seen for the bear market starting to slow down. Besides that, and by the way, I really recommend checking out this insight as well as this one about Binance FUD, which a colleague on our team wrote. And I think it's a really good one, talking about how spikes in doubt by the crowd revolving around Binance, the top exchange in the world, tends to correlate with a lot of really interesting patterns in prices that you can take advantage of by looking at that. Now, besides that, I think we can take a look at some of the main Bitcoin metrics now and just get an idea of what's going on the crypto landscape. So if I open up our main template here, let's see what we got in terms of volume right now. So trading volume, obviously the big spike happened about 5 weeks ago when the FTX news came out. It settled down. On-chain transaction volume is actually way down now at about 6-month low levels. So not a lot going on there. Not the end of the world though. Volume is not always the most reliable indicator when it comes to future price movement. What is probably better indication of future price movement is daily active addresses and circulation here. Daily active addresses, right now on the 30-day average scale, it's hovering around, it looks like around 925,000 active addresses per day. We like to see something over about 1 million, which would be right there. So when we see these bars over 1 million, tend to see a lot of price bottoms form. When it's below, things can go either way. Now, circulation is also very important. This is counting the amount of addresses, unique addresses, unique tokens that are moving on any given day. So if there's a wash trade of the same coin moving back and forth between two addresses and over and over again, it's only counting that coin once, because it's measuring the overall amount of coins, which in our opinions is a much better supporting metric to take a look at how much actual network activity is going on, rather than how manipulative wash trades and things like that are giving kind of an artificial feeling that coins are moving a lot when they're really not. So if we take a look at circulation on our Sandsheets model, which is measuring the amount of circulation versus the current market cap that's going on right now, we can see that we're on our 5th straight month of a bearish signal happening. So according to this macro chart, it's saying that there is not quite enough juice to justify a big price rise right now. When we see long stretches of red, prices tend to become volatile and lean toward dropping, as history has shown. When we see more green, things can go either way. And we've talked about it quite a bit. This stretch after November 2022 was a massive anomaly where we saw plenty of circulation, but it was mostly because whales were selling and not for the reasons that would normally justify prices rising. But I still think this chart is reliable, nevertheless, especially when it comes to red stretches like what we're seeing right now. It's been very reliable at predicting when prices will move down and when networks are not getting enough circulation. Besides that, let's take a look at where we are with MVRV now. We talked about last week where the midterm traders were actually above water because prices were starting to enjoy a nice rise. But after peaking here around December 13th or so, it looks like the 30-day MVRV has fallen back to flat. It's sitting at about 0.85% with really 0.15%. I guess the axis, I need the axis to show there. So 15% would be right there, and negative 15% would be right there. And generally, if the red is above this line, that's an extreme point where prices typically correct. If it's below this line, that's an extreme point where prices typically rise. We're not in either of those spots right now, and it's about as neutral as it can get. That being said, we do have the 365-day MVRV, which still looks quite good for the patient holders who have watched the average traders continue to be massively underwater here, so much so that the average trader is negative 32%, which is quite huge. We go to the last 2 years and take a look at historically what's going on. And yeah, pretty much, we saw that 2021 average trading returns were just through the roof. They got up above 100% to 104 at one point before a correction happened. Finally went underwater here. This would have been the bottom signal, the time for traders to really jump in at relatively low prices where others are in pain. Prices went on another run all the way up to a new all-time high here in November 2021. You can see how high that 365-day MVRV got, and then boom, huge correction down. And mid-June here was the point in which traders were at an ultra pain point themselves at negative 50%, and prices started to rise again. But even with all these fluctuations, we see that the 365-day MVRV is still well below 0%, which should theoretically be a good signal for the long-term holders who are sitting on their coins and waiting for things to get a little bit better. So midterm, as neutral as we can get, long-term, still looking bullish on the MVRV side of things. Funding rate, we already went over it, pretty neutral at the moment. Whale transactions, this is actually quite an interesting look just over the last 2 years. Red bars are the amount of transactions that are worth $100,000 or more. Yellow bars are transactions worth $1 million or more. And look at how much things have really dropped off, especially for the whale, the bigger whale transactions, $1 million or more. They're pretty much at their lowest point in the last 2 years, and whales are just being very patient and sitting around right now, not doing a lot either way. It's ideally when we see a big dip, we would love to see a big whale spike, because this is a price reversal indicator, if anything, just like some of the other metrics we've talked about earlier on the call. But right now, they're kind of just watching prices, dump here and there and not doing much about it. Once that changes, once you see a dump, which there will be another dump at some point, and you suddenly see a big whale transaction count spike, yeah, that's the time where whales are very, very likely accumulating, and you can ride the wave up with them because they're buying with the intention of pushing up prices. So I think that's interesting. And then the $100,000 or more whale transaction count line is just continuing to decline gradually. Not quite this extreme drop off that we've seen in the last couple of months for the $1 million or more lines. We already talked about supply distribution. It's interesting to see that the on-chain profit to loss bars have gone up just in the past week or so. I think this was just a sign of a lot of profit taking going on, just from people who bought the dip, back in November. I wouldn't make too much of it though. I mean, zooming in here a little bit, we have seen that it's dropped off now, but like these two lines, this was a good top signal actually, because what happened the last time we saw a big top signal right at the end of this bar, that literally was the big local top before a huge drop off, which of course happened due to FTX. But you never know, this could have been a lot of big whales in FTX or people who knew of the impending scandal that was about to take place. They took profit here and we saw a huge drop. So we saw even larger bars here, two big bars showing that there were a lot more transactions happening in profit than in loss. And that typically is a top signal that if you saw it at the time, would have been a great sign to take some profit yourself and sell. Let's see. I think that's pretty much all we can talk about for Bitcoin. Do you have any other topics maybe that you'd like to bring up here, Maxim, before we jump into a couple of questions?
We have very good questions. I think we should
let's jump into them.
Mm-hmm. It's about stablecoins and then about Binance USD, and there was a request about even Solana, and I'm not sure how much we can check it, but
well, where should we start? What's a good question we can look at?
Let me check once again. So where was it? Oh, there was also Cardano. I'm not sure I understand. Max, did you understand, Max Powers? Did you get a chance to look into the Cardano transactions? In transactions, we briefly discussed. If you can explain, Max, what it means. Cardano and transactions and transactions. Yeah, probably Max is still looking into this nested transactions, what it means. Again, then it was. Yeah.
Oh, I was muted. I'm sorry.
Okay.
Yes, it's about nested transactions. I think it's like an implementation detail that we don't cover yet, so we can't see the whole story basically. And from what I know, it's still the same.
Okay. Good.
Yeah, I vaguely recall a user discussing last week the amount of transactions within each Cardano transaction and whether there's a way to visualize that on our charts. The answer to that is no, we don't yet have that blockchain implementation. But we have gone over Cardano quite a bit on our previous shows. So I would recommend we mix it up and look at a few other assets this time around.
Mm-hmm. And then there was this look into DAI and USDC deposit and withdrawals and supply held on top. I think that's what Daniel Mata, our long-term participant. I think it's everything related to exchanges. So if we can see flow of DAI USDC to inform exchanges.
DAI and USDC. Okay.
Yes, and so but we plotted. Yeah, but we plotted on. Then you replace the price.
Yep. Exchange flow balance for DAI. Let's lock that. Move the price to Bitcoin. Lock that, and then we're going to move the USDC. If I can type correctly. USDC on Ethereum. Exchange flow balance here. Switch this to green, and let's see what we got.
And then also supply, hold, and exchange for both USDC and DAI.
Got it. Let's see, lock that. Switch to DAI. Actually, this is fine. Supply on exchanges. It's going to get busy on this chart. Lock that, and finally DAI. All right, so this is everything all together. We've got exchange flow balance of DAI, supply and exchanges of DAI, exchange flow balance of USDC, and supply and exchanges of USDC, which actually looks quite interesting. Where can we start here, Max? And let's see, we've got the exchange flow balance of DAI looking fairly flat. The supply and exchanges of DAI has continued to fall. Just in the past 6 months, the supply and exchanges has basically dropped by about a third, going from 7.26% in late June to 2.5% where it is now. I'm curious if you have an explanation for why that might be.
Flight to self-custody, same.
Makes sense,
bank run, yeah. Actually, we should also add an USDT. And you know what? It looks like it's easier when we analyze hide for a moment flow balance, and we just keep supply held on exchange.
Yep.
Well, you could also hide it, not necessarily move anyway.
I'll bring it back. It's okay.
And then we add the USDT.
USDT, okay. lock this. Okay, it's already locked. Oh.
And supply held on exchange, yeah.
Okay, now we've got all three together here. So we've got USDT really, really dropping fast, USDC going up, and DAI going down. And this actually lines up with what whales are doing, because they've been accumulating a lot of DAI, a ton of USDT, and dropping USDC just in the past week. And supply and exchanges is essentially inverse to that.
Yeah, could also be. Could also be that because of USDC and Coinbase, at least Coinbase or Circle, had a proposal or suggestion, you can park with us and we will share with you part of Fed rate, maybe part of the story. So big players are doing it and they're moving to exchange to get part of the deal and in a easier way than you can do it in a classic finance. I don't know if it's really like just my wild assumption to be proved. But generally, if you remove USDC, which try to go its own way, with those two crypto native stables, USDT and DAI, yeah, especially USDT. Actually, USDT looks like it's just flipped. It removed and USDC moved in. So maybe it stayed more or less flat. But generally, it's still going down. Now, because it was a request from someone, we just give information, and then once we're finished, we can share the chart layout, so you can look into it and compare to the past, how it worked in the past, and see what conclusions you will come up. Right?
Mm-hmm.
I generally think it's good when people move out of exchange, but
it's an interesting when it comes to stable coins, because theoretically you want those stable coins on exchanges so that a big buy can happen at any given moment. It implies there's more buying power, but that's not necessarily always the case, especially if supply and exchanges went up simply because someone liquidated a bunch of their Bitcoin. So it's tricky, but in general, I actually think it's best when we see something like what USDC is doing, which has been a big move over the past month of what looks like, they've gone up 360% just in the last month in terms of their supply and exchanges, which is just massive. But yeah, does the person who asked this question have any sort of specific motive for what they're trying to find out?
I think it's just part of the storytelling, because it's for us, when we understand the market, it's all about storytelling. You look into data, it tells you the story, and 90% of the time it's just a story, but at some specific time when puzzle pieces get together, you get an insight. So I treat it like this. I don't get yet 100% excited, 100% clear insight, except the one I shared at the very beginning, but this part of the story, definitely.
For sure. Well, great question to the person who asked. Why don't we jump to another question? What do you see in Max or Max?
Yeah, Max, what else did you have?
We also had the suggestion to look into BUSD related to the Binance FUD. I'm not sure if that's covered already by the insight you shared, or we want to look into it now. And then we had the Solana suggestion.
Okay. And for Solana, is it just general market health? Okay. So we'll start with BUSD, and we'll actually look at both the BUSD on Binance chain as well as on Ethereum chain, because I think they're both going to be relevant. Love the questions about stablecoins today. Okay, so for BUSD, let's take a look at supply and exchanges, just like we. Oh, you know what? So we don't have supply and exchanges on the Binance chain. We only would have it on the Ethereum chain. So we can at least look at that for a moment, and then we'll check out some other metrics for both. Oops, it's BUSD, not BNB. Supply and exchanges. So yeah, they're doing the same thing as USDT and DAI, and the amount of BUSD on exchanges has really fallen off a cliff ever since the FTX stuff. So this could very well be related, considering the timing, to the USD moving off. I don't know. Maybe someone would know this, and I feel silly for not knowing. But I don't know if BUSD was held on FTX or if that was even an option. But if it was, this would make a lot of sense. Or it was just coincidental and a lot of people shuffled their stable coins around the time that the FTX news happened. Either way, we have seen a drop off going from 78% on supply down to 60.5 in just about 5 weeks. That's a huge, huge drop off and is indicative of this coin changing a lot of hands quickly. You can see that there's been a huge daily active address spike and circulation spike just 3 days ago. So this, you know, when we talk about the Binance FUD that started about 3 days ago, this does look like there was something happening behind the curtains that shows that there was some smoke to the concerns that were happening with Binance. I wouldn't say that this is necessarily like a you know, catching them red-handed in any way, doing something crazy, because we've seen comparable spikes in the past. Let me just switch. Let's switch the price to Bitcoin just for a moment to see if there was any correlation there. So yeah, I mean, the spike did happen right before the top, but it's hard to say whether there's a lot of correlation going on to, you know, a big BUSD move and then prices jumping up or down. And if we go to the BNB version, we can see a little bit. So let's look at like the number of addresses on the actual Binance blockchain, starting with the largest here. So yeah, the number of addresses hasn't really moved too significantly, it looks like. As we get smaller, we see a lot more, of course, makes sense. But yeah, the amount of million to 10 million here, if we just isolate them, they were starting to grow. I mean, really interesting to see that there was about 1,200 here on August 12th, and then it just suddenly dropped to the low 300s and never even got above 400 since. So I'm very curious as to what that's all about. Weighted sentiment, I mean, it's hard to say that sentiment is going to matter too much for a stable coin like BUSD. It has been talked about a little more in December here, but nothing outside of the ordinary. Do you have any ideas, Maxim, of any other prevalent metrics that we might be able to look at for BNB, or I'm sorry, BUSD?
Not from top of my head. Definitely there is something. Yeah. Let's next week when we analyze our internal market, let's look into it and.
Well, I did find one thing. I do think this is sort of relevant. Take a look at the lines here beginning 5 days ago. because we're through the 15th right now on this chart. We've got the 1 million to 10 million line really falling fast since December 10th.
Yeah.
We've got the 100,000 to 1 million also dropping. Boom. This one's
so relatively
dropping.
big holders are dropping.
All of the big holders, and then look, they're being sold off to the small holders. Those are all going up. And it's very, very, I mean, this is a super clear split. So all the small holders are essentially buying the large holders BUSD right now. And I'm curious if the people who are FUDing Binance might have a little something here that would show that
you know what, because it's a stable coin, you can combine this two distinct groups into just two groups and see how it worked over time.
So you mean I can just merge all of these?
Yeah.
And then I'll merge. So that was up to 100, and then we'll go 100. Actually, we'll do one more really quick. We'll do up to 1,000.
Yeah, it's one.
And then 1,000 plus. Not sure why that didn't work. It says no data. Let's try one more time. 1,000 without that one. Okay. Get rid of that. Get rid of that. 1,000. There we go.
Okay, and now you look in the longer time frame.
Past year.
Well, you can do.
And then let's also add Bitcoin's price while we're here. Let me make sure to lock these. Right there. Okay, so now we've got the price of Bitcoin versus the small and large whale holders, or small and large BUSD holders, split into two categories. So obviously we see a few things over the past year, a big shift in the large holders dumping a ton of their coins here in mid-July. Didn't seem to do a ton to price. Bitcoin was rising at the time. And then both seemed to rise in tandem before a big drop off.
More or less in tandem, not exactly. This big group actually stayed flat.
It did stay flat up until a small rise right here at the FTX point, and then a dump. And price, I mean, price has sort of gone in the direction of the red line here, at least more recently, where right when they started accumulating, that's when the bottom happened. And then they dumped right before the local top. So there's something there. I think this is fascinating and can require a bit more research from our team. But yeah, you know, when it comes to the largest exchange in the world, I think there's always a little bit of correlation between, you know, when BNB suddenly gets moved or when BUSD suddenly gets moved by the larger holders. And I'd like to do a little more research on this, but I think it's a really fascinating question from the person who asked it, because yeah, it does look like there's something very bizarre going on just in the past 5 days with such a sudden dump off, while the small holders are the ones scooping them up. So yeah, I like it a lot.
Something going on, yeah.
Anyways, guys, I think we've hit that time. We've talked about a lot here. I can tell because my throat is starting to go raspy here.
Yeah. True. It's actually 1 hour. It's difficult also for us and for listeners to hold focus for a long time because of complexity. We switch and also context.
Of course.
Not so easy.
But yeah, guys, I think right now we're definitely seeing a lot more FUD than FOMO compared to previous weeks and months. That should be considered a good sign overall. Maxim has said that there could be an argument for a 6-month rise coming up. Doesn't mean tomorrow, but sometime in the near future. Maybe we need a little more capitulation. Really quick, Maxim, you mentioned a five cycle. Wow, I'm blanking on the word. We were hitting a fifth cycle like just a couple of days ago.
Okay, yes. Hopefully, I will have time to prepare this. It's a long reading. That in crypto, we finished the very long cycle from 2000, where you counted 9, 10, 11 till the end of the last year, and it's very long time. Let's say 10 years. So it requires long time to correction. And because during this long time, many indicators, many metrics and approaches have been built, they've been working quite nicely. You know, this moving average 200 days, then rainbow chart and plan B, whatever. There are many. Even some of our metrics, they've been working during this time because the dumps and pumps were inside the big cycle. Now we are changing. Almost nothing will work. Yeah, and it's very exciting. Well, for me personally, also as a researcher, an analytic topic, you realize that whatever's been gathered as a knowledge, it will not work anymore. Even the halving, it will not work the way we expect, or the way most of people expect. It's very exciting. So fortune can be made, but a lot of nerves can be lost. You should approach now the market like you know nothing. Yeah, and nothing in terms of collected knowledge for Bitcoin or Ethereum or DeFi metrics. Yeah, only very basic principles, they still work, very basic principle. But in terms of when we get close to 200 moving average, we'll bump on it. Doesn't work. Yeah. When we go, even in our case, like in MVRV, 30 days, actually 30 days will work, but when we, because it's shorter cycle, but we can get more extreme levels of MVRV 30 days. Everything has to be reconsidered. That's why it takes time. So big cycle finished for Bitcoin, and let's say even optimistically 3 years a bear market. So we have 1 year behind us, 6 months rally, another year, and then it's done. No, unless there is another way. This corrections after a very long market can also be super severe. I don't think it will happen, but there is a chance 20% or even 15 will go all the way down indeed to 10K or 8K. So this it means it's shorter, but much more intense. Wow, I hope it will not happen because it will be very intense. Most people will not survive and they will stay away from market for a very long time. Therefore, I think it's more or less enough for now, 6 months rally and another attempt to go down and finish it. But yeah, mostly I talk in these terms exactly because what you say, it's a very long cycle has been finished. And with the cycle, it's also monetary policy of central banks has changed here. Now people will start connecting market prices or predictions because of what Fed or Powell says. Yeah, it works until it does not. I bet it will stop working, this correlation. Or let's say you expect them to start changing Fed rates to stop it or even to lower down, market will should rally. No, it will not. Maybe it will rally before or after. It's a kind of difficult time now to make predictions. So we stick to fundamentals. Fundamentals in the sense that once you see everyone, or like 70% say, okay, the next goal is 2025, you say, okay, I don't think it will happen. Or if we go now in Bitcoin 500 more down and everyone is saying, okay, the next stop is 10K, you know, maybe it's a time to pull the trigger and go long. This kind of fundamentals, they will work. Or they will keep working. The moment majority or some kind of consensus of media publicly talking, people agreeing something, you know, okay, this will not happen. Opposite will come. This is fundamental, what I mean. Fundamental in terms of behavior analysis. But metrics which we've built and the way we use, we will have to reconsider quite some of them. Yeah. A lot of
stuff. Yeah. All right, Maxim. Well, thank you so much for being here with me. Max Balrash, thank you for running a great stream as always. And cheers to everyone who joined for the show and are still with us. We appreciate your support. Spread the word about us Tell everyone about our new fancy blue check mark on Twitter. We're very, very proud of that one. And
Yes.
even though it's less earned these days, but regardless, thank you all, and we'll talk to you next week. Cheers.
Talk to you next week. Yeah. Bye-bye.